Futures are lower this morning, and there are three things driving it: rising oil, geopolitical tension, and a packed calendar of data and earnings that could shift the market's direction before the week is out. Let's start with oil. Prices are pushing toward $80 a barrel. The catalyst is rising tension between the United States and Iran. Markets are pricing in the possibility that conflict in the Middle East could disrupt oil supplies from one of the world's most important energy-producing regions. When oil climbs fast, the effects ripple outward. Energy costs feed into prices across the economy. Corporate margins get squeezed, consumers pull back on spending, and all of that tends to weigh on stocks, which is exactly what we're seeing in futures this morning. Contracts tied to the Dow, the S&P 500, and the Nasdaq are all pointing lower ahead of the opening bell. Now, oil and geopolitics alone would be enough to put investors on edge. But this week also brings two major inflation reports. First is the Consumer Price Index. That's the number that tracks what ordinary households pay for goods and services. Second is the Producer Price Index, which measures costs earlier in the supply chain at the wholesale level. Think of it as an early signal for where consumer prices might be heading. Together, these two readings will tell the Federal Reserve and the rest of the market whether inflation is continuing to cool or whether it's proving harder to shake than expected. That question matters enormously right now. The Fed has been holding interest rates at elevated levels to bring inflation down. Markets have been betting that rate cuts are coming later this year. But if this week's data comes in hotter than expected, those bets get pushed out and borrowing costs stay higher for longer. That's the kind of outcome that puts pressure on both stocks and bonds. On top of all that, several of the country's largest banks are reporting quarterly earnings this week. Bank results are worth watching closely because financial institutions touch nearly every corner of the economy: consumer loans, mortgages, corporate financing, deal-making. Strong numbers could help settle nerves. But any signs of stress, rising loan defaults, shrinking deal activity, could add another layer of concern to an already cautious market. Geopolitical shocks have a track record of producing sharp short-term moves that fade just as quickly, or sometimes they don't. That uncertainty is exactly why investors are watching the Middle East situation alongside the data calendar this week, rather than treating either in isolation. Watch oil, watch the inflation prints, and watch what the big banks say about the health of their loan books. Those three things will likely tell you more about where this market is heading than anything else this week. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.